How's it going, everybody? It's Stas here, and in this video, we're going to be breaking down the markets, talking about what happened today in the S&P, the Dow, and the NASDAQ, and I also want to share with you guys what I personally did in my trading today, and I want to break down a bunch of stocks and a bunch of ETFs that I'm watching and looking to trade as we're slowly wrapping up the month here of April in 2020. And as always, all I ask from you guys is if you enjoyed this video, find any value in the video, hit that like button for me, and also consider subscribing to the channel. And also feel free to join our Discord chat and our Facebook group, which, mind you, those are 100% free of charge, so no excuses, guys, and they are linked down below in the description box. So let's get right into the video today, as always, starting off with the S&P 500, which, judging off of the closing price of $1.51 in the red, one would be like, okay, not too crazy of a day here for the S&P. But then looking over at the technicals, it was a pretty rocky day despite us only closing down $1.51, down about 0.05%, and you might as well call that a break-even day, right? So break-even day pretty much, but the technicals were all over the place. It was a roller coaster ride. And if you guys were paying attention to the markets, a big number we got today was the jobless claims number. And this is a number that many people have been paying attention to every Thursday, especially over these past couple of weeks here, as the CV, as the global crisis has been destroying the economy here in the United States and, of course, globally, right? So people have been looking at these numbers, and today, believe it or not, we got a 4.4 million jobless claims number, but the thing is, these numbers are already baked into the stock market. The stock market already knows that the jobless claims numbers are going to be terrible. It's not a surprise that many people are unemployed and filing for these jobless claims and these unemployment benefits, right? Which is why we didn't see the stock market tank this morning, and quite frankly, over the past couple jobless reports, we haven't seen the stock market tank. So the market on that 4.4 million claims, jobless claims, news that came out pre-market, it continued to go up, again, because it's baked in there. It went from 28.10 up to 28.45. So you may be asking yourself, why did the market end up dumping from 28.45 down to about 27.80, or rather 27.97 towards the end of the market? Well, do you guys know Gillette? I don't know if I'm pronouncing this correctly, but Gillette is the company which last week, a couple days ago, whenever that was, we got some news that they are really close to a treatment for the CV. And again, I'm no medical expert. I haven't done a lot of research into this, but this brought a lot of optimism into the stock market. This is something that the market didn't have baked in to the price. And that is why we saw the market on this day. Take a look. On this day that Gillette on the 16th came out with this treatment, or the trial treatment, whatever, the Gillette stock went from $75 to $90, right, on the 16th of April. And what did the markets do on this day, 16th of April? If I pull up the S&P, the 20-day chart, you guys can see 16th of April, where are we? We saw a massive gap up that day, right? Very, very big gap up, because this is a statistic, this is a piece of information that the market didn't have baked in. Like the jobless claims numbers, it obviously had that baked in. So we saw a massive spike in the market when we got that news of the treatment a couple days ago. And that kind of works, or it worked today against us, because we got negative news around that treatment from Gillette today. And again, I'm no medical professional, do more research into this, and this negative news that we got ended up tanking the stock from 83 bucks to 74 bucks. And notice how the markets were rocking and rolling up until this point, and that is where they took a hit. You guys can see literally the same time the markets took a hit, and that changed the course of the rest of the day. So in my opinion, guys, no joke, if we didn't get this catalyst from Gillette today, I think the markets would be up a lot higher. I think the markets most likely would be at above 28.40 for sure, because at this point the uptrend was continuing, and that's where we got the bad news, and all of a sudden the floor fell from the bottom of the S&P. I feel like we could have closed a bit higher if that news never came out. But that goes to show how some stuff is baked into the stock market's price, but other unexpected things like this, what happened today, it's not baked in, which is why we do see these drastic drops in the market. And you'll notice this across, your career as a trader, investor, as somebody just watching the market. You can see how things move and how the markets react to certain things, and you'll notice, okay, that's baked into the price right now, that's not. And then you'll be able to, think of different scenarios and different ways that you can move your money around, and that's kind of an interesting thing to do, especially in these time periods. So the Dow Jones today, guys, up 39 bucks, nothing crazy, up 0.17%. And just like the S&P, we took a big dump right around noon Eastern Standard Time once that catalyst, that negative catalyst came out. And the NASDAQ today down about 0.25%, roughly, down $23. So across the board, markets, they were pretty much at break even. We got that negative catalyst, which honestly, that could be short-lived. I don't know if this is going to dump the market and be the sole catalyst that the market dumps, from right now. But it isn't obviously good for the markets, right? And there's obviously a lot of other things that are going on right now that are not good for the market, which I'm sure you guys can write a whole book of what is not good for the market right now, and I could definitely do that as well. And if I went over everything that's negative right now in the economy, and everything going on, the video would be about 5 hours long. So we don't have time for that, but let's just put it this way. There's a lot more negative things right now than there are positive things for the stock market, which brings me back to that level that we're struggling at right now, which is why, from a technical perspective here, and of course when we tie in some of these negative fundamentals, which, mind you, most of the fundamentals are negative, this could be a point where the S&P takes a massive dump, and we're already seeing some resistance, very strong resistance, over these past couple of trading days. Notice how since the 8th of April, we really haven't, actually more like the 14th of April, we've struggled at 28.50 to about 28.80. Notice we didn't break it here. We didn't break it on the 17th, on the 20th, right? We failed on the 21st, the 22nd. Today we retested 28.50. We failed again. Of course, it was mostly because of this negative catalyst. If we didn't get that catalyst, we might still be pushing up here. But either way, until the S&P breaks 2,900, 28.80, I'm not going to be fully bullish on it. Really, I still think at this point we could be dumping, and the technicals kind of support that. The technicals are looking a little bit more bearish now, especially since, again, we didn't break 28.50, and now we're looking to test down here at about, let's say, 27.65. If we break that level, we may be going back down to, let's say, the lower 2,700. So take a look at these levels, guys. When you're in doubt, when you're looking at, let's say, some shorter time frame charts, you're not really sure what's going to happen, the best thing you can do is pull back and look at the macro chart. Sure, we fell from 3,400 down to 2,200. We rallied back up. You have to ask yourself, is this rally going to push us all the way back to all-time highs just like that, or are we going to rally a bit, consolidate, fall a little bit more, consolidate, rally back up? You have to realize not everything goes straight up and straight down, which is why I'm thinking this could end up seeing a bit of a sell-off. A little bit of another correction before either consolidating, popping back up, or maybe even continuing down further. So at this point, guys, you have to be very careful in this market. In my opinion, I have a lot of cash. I'm not looking to buy a lot of stocks right now for the long term. I'm following the trend in terms of my trading, but when it comes to long-term stuff, I'm still not really buying anything. I can't even remember the last time I put in a buy order for a stock for the long term. I've really just been doing a lot of trading at this point, which we'll get into here in a minute what I personally did. But before we do, let me know in the comments, what do you think about the markets right now? What do you think about these technicals? Are we going higher? Are we going lower? Do you see what I'm talking about on the S&P here? 2,800, 2,900. It's a very strong level of resistance. Let me know your thoughts down below. So what I did in the markets today, guys, it was a good day, and it was also a bad day. Do you guys recall I'm in GDX call options, and GDX was on fire today. It actually almost hit, believe it or not, my strike price for the call options that expire in August, right? And those call options I have, they are the $35 August 21st call options. And I got them last week, I believe. I forget what day I got them at. But GDX was at like 30 bucks when I got these call options. And again, they expire in a couple months, and it almost hit my strike today. And you guys can imagine, these options were up a lot today. Yesterday, I was up 40% on them, and today, at the peak, when GDX was at about 34.75, my position was up about 85 to 90%. So what I did there, I didn't liquidate the entire position because, again, it expires in 4 months, guys, so I still have time on my side when it comes to this trade. So I still believe I can make more money in this trade, which is why I'm holding on to a lot of the contracts. But I did end up just locking in a little bit of profits here because of such a quick run-up in GDX. Let's be honest, guys, I wasn't even expecting this quick of a run-up in GDX. And you can tell because, again, I bought 4-month-out contracts. You know, we can see it ran up from 30 bucks nearly to 35 bucks in the span of 2 days. So I sold a little bit there, locked in some profits right around, 34.50, 34.40-ish on those options, booked a pretty huge gain there. Now I'm looking to see if this cools off a bit, and maybe I can buy even more options at a cheaper price or contracts at a cheaper price. We'll see what happens there, but I feel comfortable locking in some of that very quick gain that I got here. And on the bad side of the trading, that was the good side, the GDX options, right? On the bad side, SPCE, Virgin Galactic, I tried to get in on the bottom here, and timing the bottom in anything is pretty impossible, right? But when you're trading, you kind of have to, pinpoint your entries and exits to the best of your ability, trying to time the bottom is a part of that. Sometimes you fail, sometimes you almost get it, and of course sometimes you nail the bottom, like I have a couple times, many times throughout my career. But I've also failed to hit the bottom many times as well, and today was one of those days with SPCE. And judging on this 10-day 30-minute chart, you're like, Stas, why the heck did you buy into this stock? It's descending, it hit 21 bucks, it seems like it peaked, it's falling now almost back to 16 bucks. I know it's not looking good on this chart, but if we pull back, again, like I said a couple minutes ago, it's always wise to pull back a bit, see a larger time frame scale. If you pull back a bit here on SPCE on, let's say, the 90-day, let's stick to the 90-day. You guys can see that we're approaching a very strong support right around 16 bucks, which that's kind of where I should have waited to enter. But again, I tried jumping the gun here, and I was looking to get in this general vicinity here. In this general vicinity, I was looking to time this bottom because you notice how, as we look at this larger time frame chart, this would be a higher low if it were to bounce here. So the theory behind my trade today was to get in on that higher low bounce, and originally I was looking at 1680 to 70, this general area to hold. That's kind of where I was looking at as a support today. But if you guys can see, we clearly did not hold it. And that's kind of where I prematurely entered into the stock. I wanted to get in at around 1690, 80, and then ride it out. But you guys can see the technicals really didn't back that. I got in before the confirmation of the breakout. So that's kind of my fault. So I scrapped this trade, 1690, ended up taking a decent loss there. I think I got out more towards the 1650. So overall, I took a decent loss there of about 1.4% on SPCE. But the thing is, guys, that is not that bad considering how volatile and crazily the stock moves. We can notice how if it holds that level tomorrow, and we end up rallying on this level of support, maybe around 16 bucks, which would have been the entry I should have, waited for, but I got a bit impatient. If we could get to 16 bucks and I re-enter, I can make all of that loss back and a lot more, considering how quick space SPCE has moved after it's bounced on this trend line in the past. And notice how in the past, on the 25th of March to about the 3rd of April, we did something very similar to this. We hit a peak. It ran up very quickly from 9 bucks to 20 bucks. We hit a peak. We really descended down to about 12 bucks, and all of a sudden, it catapulted back to 21 bucks. So at this point, could we hit 16 and maybe catapult up to about 24, 25 bucks? I think it's possible, and the trend that we're seeing here is pointing to at least the beginning of that. We're not going to be able to know if it's going all the way up to 25 bucks until obviously it does that, or until we start to get a break above, 17, 18, 19, and 21 bucks, as these are all levels of resistance coming up. So all I'm saying is we have to play it patiently. Play it safe over these next couple of days. And I'm telling this to myself too, because again, I took a loss on this due to my premature entry and me kind of rushing a bit here. But I should be able to and we should, if you do your own due diligence and break down and understand SPCE for yourselves, we should be able to make some money on that bounce back. I really see it possible. So let me know down below in the comments, what are your thoughts on those trades? What are your thoughts on the markets, again, in general, and anything that you're doing right now? And let's get into some earnings reports to keep an eye out for. These first two, they just reported earnings today. WWE, World Wrestling Entertainment. This company definitely getting hit hard right now from the CV, as many companies are out there, but their stock is actually rallying pretty aggressively after hours. We closed at 39 bucks, popped to about 44 bucks after hours due to earnings, and now we're hovering right at about $43 per share. So WWE could definitely be a play tomorrow on this momentum. Their earnings ended up being Q1 adjusted EPS of 41 cents versus the 25 cents estimated, and revenue came in at $291 million versus the $266.52 million expected. So they beat by a huge margin on EPS and a pretty massive margin on revenue as well, which is why we can see the stock is up a pretty big amount here. This has to be around a 10% move nearly after market hours. And another company that reported today after hours is Intel. And Intel is falling through the floor right now. And I can tell you one brief reason why it may be. It's because of their guidance. And they initially reported earnings of pretty good numbers here. And you guys may be asking, why do they fall on earnings like this? A lot of the time when companies report good earnings and negative guidance, the stock goes down because the forward guidance got worse. And that's kind of what we're seeing here. Intel reports EPS of $1.45 versus $1.26. It crushed EPS. Revenue came in at $19.8 billion versus $18.66 billion, but it sees, that was for Q1, but it sees for Q2 EPS of just $1.10 versus the $1.17 expected. So EPS by Wall Street, that is. So EPS is going to come in short based on their guidance. guidance here versus what Wall Street expects, and that is a big reason why the stock's down here, although their revenue is seen at $18.5 billion for quarter two versus the $17.8 expected from Wall Street. So that's kind of one reason why the stock could be going down. Is it the sole reason? I'm not exactly sure, but it's definitely one of the reasons, as guidance, lowered guidance, not always, but it usually impacts a stock's price negatively. And we all know, I've been mentioning on this channel this week, airlines are reporting numbers. JetBlue is either today, at some point this week, maybe tomorrow. Yeah, I think tomorrow. JetBlue's reporting earnings. I believe AAL is either today or tomorrow. American Airlines. Let me double check because I can't really see here. Where's the bell? Maybe it's not tomorrow for AAL. But either way, AAL, JetBlue, they're reporting earnings, and all the airlines in general. They're worth watching due to the whole craziness going on right now. And Verizon, the telecommunication companies. We saw AT&T report yesterday. Verizon actually reports tomorrow pre-market Central Standard Time, 7:30 a.m. Central Standard Time, which is obviously before the market. So those are a couple of stocks to definitely keep an eye out right now in terms of earnings. And some other ones that I'm watching include AMD. AMD, for the first little bit of the day today, I thought it was going to perform exactly to how we talked about in yesterday's video. And do you guys remember, we talked about yesterday 55.30. If we break 55.30, which we did actually in yesterday's session, and we start to rally above it, we might fill the gap to 59 bucks. And the market, you know, as the market was hot this morning, stocks were pushing. AMD was looking to do exactly that. So I almost got into it. Thank God I didn't, looking back, because, you know, that would have been another loss for me today due to the whole Gillette catalyst that brought down pretty much all of these stocks here. But, you know, either way, I'm looking to see, as it obviously failed and then broke below 55.30, I'm looking to see if we can somehow get back above 55.30, 55 bucks, or maybe even if we test 53 bucks here, which we tested back on the 21st of April, we may be able to get a move from 53 bucks back up to 55 bucks. So AMD is worth watching here. Shopify is one that I'm being a bit careful with, as it is extremely inflated. Just over these past couple of days alone, the stock's gone from 380 to nearly 670 bucks. But you can't deny the uptrend is still holding at this point. We're still holding that 50 SMA here on this 30-minute chart, on the hourly chart as well. But we are at a sticking point at about 635 bucks. You guys can see it, 635 to 640-ish. You know, we failed there yesterday. We failed there this morning. I'm thinking if we break 640, guys, this could be a straight shot for Shopify back up to about 660 to about 665, which it made that move about a couple days ago. I could definitely see it happening again, especially if we get a killer day in the markets, right? Again, I mentioned earlier, you know, the technicals are looking a bit scary. We might see a bit of a dump off, but you have to take that with a grain of salt, because at the end of the day, anything could happen, and trading the trend in front of you, that could be your best friend. Throw your biases out the window, throw all that crap out the window, and just trade what's in front of you. That is how, at the end of the day, you should do it. Take your emotions out of everything. And as I'm taking my emotions out of everything and looking just strictly at the chart here, the uptrend is intact. But again, we have a sticking point here, which I would need to see a break above to get into, right? Into SHOP. And space, we already went over that, SPCE, so no need to talk more about that. NVIDIA is another one I was watching. We failed to hold 285 today, which, again, if it wasn't for Gillette, you know, the market's tanking because of that. This would probably be a lot higher now. But It happened. We broke below 285, so now we have to play it as the chart is, play what the chart's showing us. And what the chart's showing us is a bit of support here at 280. You guys can see it. 280 bucks is holding. 275, 280, this general area is holding. So maybe from 280 back up to 285, that could be a tradable move here for NVIDIA, especially if, we hold it into the session tomorrow. If we're consolidating there pre-market, watch for that move. And of course, from 285 up to 295, that is the move we talked about yesterday, and it kind of already happened today. And it could happen again if we move up above 285 in tomorrow's session. So those are a bunch of the top ones that I'm watching, guys. AMD, Shopify, SPCE, NVIDIA. We already talked about GILD, and we saw the massive move in gold today. Gold just keeps on going, guys, which again is why GDX has been crushing it, which is why GLD has been crushing it. And, technically speaking here, I'm bullish on gold. I've been bullish on gold over the past couple of weeks, and I still think it's going to 1,900 an ounce, 2,000 an ounce in the short term. And the technicals are really backing that. We were looking at a potential head and shoulders here on gold on this hourly chart, but with today's action and with today's break above 1730, that is kind of out of the window, as this is looking to break up and go back to the 1760 to 1780 area and test that level where we failed a couple of days ago. So gold's looking very bullish. GLD is looking bullish in my opinion. I didn't trade it. I kind of missed the move at this point, but anything above 164 could put this at breakout, in breakout territory. And of course, GDX, I'm long on this one via call options, and a lot of the other gold stocks have just been crushing it. And mind you, GDX is not a stock, it's actually an ETF. It comprises a lot of the gold miners into one single tradable ETF. Some of these gold miners include Barrick Gold, ticker symbol GOLD, Newmont, ticker symbol NEM, and I think Franco-Nevada is also in the GDX ETF, and a bunch more. And of course, you guys can do all that research on your own and dig deeper into it. And that's pretty much it, guys. When it comes to crude oil, it's still moving down. It had him down move a couple days ago to 650. Today, or rather now, futures are up about 37 cents. So crude oil, June is still looking a bit bleak here, as is USO. And before you do any, investing in this stuff, guys, research contango, research what is going on right now with the crude oil futures, the contracts. That is something that you should definitely look into before you invest in anything involving USO especially. So I'll wrap up the video here, guys. If you enjoyed it, hit that like button for me and consider subscribing to the channel. And feel free to actually use my affiliate link down below, and you can get 2 free stocks valued up to $1,400. And all you have to do, guys, to actually get that is simply deposit $100 into the account, and you'll get those 2 free stocks. And again, that is linked down below in the description, and it actually supports me and all the free content here that I'm putting up on YouTube. And mind you, the content here is free of charge. So again, that is linked down below in the description. I appreciate you guys as always watching, supporting. It does mean a lot to me. Stay safe out there as always. I'll catch you all in the next video. Peace out. How's it going, everybody?